Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
Caterpillar. So we have the stock seeing some pressure now. It's edging slightly lower by just 0.2%. So here's another company that presented dual outcomes. So first, Caterpillar said they expect slightly lower sales this year if tariffs remain in place and the economy dips into a recession in the second half. So this guidance came in line with previous expectations. The second one is without tariffs. So the company said profit would be at the top end of that range with sales little change from last year. So for the quarter, the company posted earnings that fell short of estimates. So Caterpillar is a bellwether for the health of the economy. I mean, its uncertainty really just caused some angst in Wall Street, because if you're struggling to forecast what demand might look like for the rest of the year and you're a heavy equipment maker, then that just makes it harder for the rest of us.
Yep.
Absolutely. Starbucks down 7%, but well off the lows of the session and overnight trading as well. Everyone says we got that consumer data, the spending data and income data. Things have been recovering a bit.
I think the word for Starbucks is really progress. So we have the CEO saying that the coffee chain is making progress in reviving growth, but of course, flagging sales in the latest quarter is really adding to the pressure. We have the newish CEO, Brian Niccol, saying point blank, the results were disappointing. But he said, under the hood, we're seeing progress. And we know that ever since he took the helm in September last year, he's made some changes. He's streamlined the menu. He's made sure that there won't be any long lines, especially if you order in store, because I think for a while it was the people ordering online that were getting the priority. But still, a fun fact, or not so fun fact, is from September last year to now, the stock has edged lower by 15%. But still, maybe it's too early to judge. We have Morgan Stanley, Raymond James, Susquehanna, though, cutting their price target.
Double short mocha. That's my order.
That's your favorite?
So is there like chocolate sauce in that?
Yeah,
I think so.
It's basically a hot chocolate with a couple shots of espresso.
That's
basically
really
what
good.
it is.
That sounds
How
excellent.
about you? Do you have a go-to order as well?
I like cafe mocha. So I know some people, they like to snub Starbucks, but I like Starbucks because all over the world, it tastes the same.
Yes, I get. I
It
feel
tastes
this.
the same.
Yes.
Yeah, I'm not a
no
coffee
matter where
person,
you
but
are.
that's, if I do something, I'll do that. All right, Snap.
Snap shares are edging lower by 16%. That's the most since at least August. So they narrowly beat revenue estimates, but they declined to issue a sales forecast. So again, like many others, they cite macroeconomic headwinds. And the angst again in Wall Street was evident. We have Morgan Stanley saying that their decision to pull their guidance this early speaks to how business is likely in worse shape than previously thought. So that's a little bit of a strong word there. We have Guggenheim, Raymond James, Citi cutting their price target. But it's not just Snap. I mean, many companies are really just struggling how to make sense of this environment. Porsche warned of shrinking profit margins. JetBlue pulled its full-year outlook, and GM withdrew earnings guidance. So it's becoming a trend.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.